everyone, it's Dr. Joanna Ray, and I'm here with you for a new series called Financial Fridays. And the concept of Financial Fridays is to get us talking about financial resilience, and this may be a term that I came up with, probably not, but maybe so. It is the concept that we can actually become more resilient, and that means that we can bounce back after different financial shocks, be prepared for things in our future, like paying off student loans, like paying off debts, and also preparing for the eventualities of things like retirement and long-term care. So those are the things that I would like to kind of think about when we're looking at financial resilience. I know it's a big topic, but basically let's get started with these small Financial Fridays. Just quick, short videos about how to get more financial resilience. And if you have any questions that you would like to be addressed in the Financial Fridays, go ahead and comment them down below. I'm looking for ideas, but basically just a quick short video on a Friday about financial education. For today's topic, I would like to talk about growth funds. So if you are not really aware of growth funds, some of the popular ones and the ones that I'm invested in are QQQ, QQQM, and SCHG. So those are the ones that I'm invested in, and if you haven't yet already, maybe check out my latest update. I'm going to go ahead and link the current one up above, and it is a way to look at your portfolio and to slant it towards something a little bit more growth heavy. So the ones that are very popular are something like QQQ. QQQ is the NASDAQ 100. It is the top 100 companies in the NASDAQ stock exchange. And it's really kind of arbitrary. So currently it is slanted towards more growth and tech companies, and it has been performing so well. I'm going to go ahead and show on the screen the performance of the NASDAQ, and it has been doing gangbusters. It has been doing so well, and my current gains in QQQ/QQQM have been so great this year. It's really recovered tremendously from last year. But QQQ and QQQM are both the same composition of companies. It just so happens that QQQM has a slightly lower expense ratio than the godfather QQQ. So I believe it's something like 0.2% for QQQ and 0.18% for QQQM. So if you're not looking at trading and you're looking at doing something like a long-term hold, QQQM will do just fine for you. But if you're someone who's looking at trading and needs a little bit more liquidity and that trade volume, you may look at investing at QQQ, even though there's a slightly higher expense ratio. The expense ratio is basically what you pay to the fund company in order to manage your investments. And usually we want that to be fairly low, as that takes away from the gains that we make in that investment. The next ETF which I would like to mention is SCHG, which is the Schwab Growth ETF. It's a new investment for me. I've only held it for a couple months. And there is one concern with the NASDAQ 100, and that is not a purely growth ETF, in a sense that the composition of the NASDAQ is fairly arbitrary. If you want something that's a little bit more dedicated to growth and that it's actually a component of the criteria which makes up that ETF, I would suggest something like SCHG or something like VGT, Vanguard's Growth Technology Fund. I'm not invested in VGT, but I am invested in QQQ, QQQM, and SCHG. So full disclosure, I am long those positions. And just to mention, I'm not a financial advisor. This is not financial advice in any way. This is just me talking about some financial tips for pure entertainment purposes. So please do your due diligence. And if you've liked this content, please click like. It helps me out so much with the algorithms, and it gives me an indication of the content that you like as the viewer. And that is so important to me. It's really what I strive for on this channel. So if you like this content, please click like and do subscribe if you want more content like this. Thank you so much for watching.